I think it's going to be that way for a very long time. There's a quadrillion in assets today. That's going to be 10 quadrillion in a couple decades. And 5% of that money makes its way into Bitcoin with some minimal multiplier. I literally think it's going to take longer than people think. And I think that is a uncomfortable thing for a lot of Bitcoiners. I think they want to see Bitcoin Omega tomorrow, and maybe that'll happen. But at the end of the day, I think Bitcoin will be 5 million, 10 million.
The largest capital pool on Earth isn't in stocks, bonds, or even real estate. It's in future debt, the endless stream of dollars that the fiat system guarantees will always exist tomorrow. The entire model depends on dragging that future liquidity into the present through constant borrowing. Luke Broyles of the Bitcoin Advisor argues this is exactly why Bitcoin isn't just an asset class but the destination for that flow of capital. Bitcoin doesn't grow by investors selling their homes or dumping equities to buy coins. Its adoption curve comes from diverting the steady tide of new debt away from fiat and into a system that can't be inflated. Michael Saylor has already demonstrated how this works at the corporate level, borrowing cheaply in dollars to accumulate Bitcoin. Broyles says the real breakthrough will be when that playbook hits real estate. With $300 trillion in global property, half of it in equity, the scale dwarfs any company balance sheet. Politicians will notice too. Artificially pumping home prices leaves voters angry and locked out of ownership. Pumping Bitcoin carries no such political backlash, only complaints from those who bought too late. That's a far easier story to sell. The inflection point, Broyles argues, comes when Bitcoin-backed loans command lower interest rates than fiat loans. That moment flips the script. Suddenly, the supposedly speculative asset is the cheaper and safer collateral. At that point, the migration of debt into Bitcoin isn't just theory. It's the new financial order taking shape in real time. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Fiat is a debt-based system. And the main problem for these politicians, whether it's the America's president or any other country's leaders, the main problem they have is that they need to keep forcing prices up. Housing needs to get more expensive. Oil needs to get more expensive. Stock valuations need to get more expensive, right? It's not enough to have your stock market be valued at a third of a century. It needs to go out to a full century, right? And of course, this is a real problem, for their voter base, right? Because if energy gets more expensive, people can't heat their homes in the winter, right? If housing gets more expensive, people can't buy as big of a house, all these kinds of problems. And so between this rock and the hard place of they need to make more debt to fund the Ponzi scheme, right? But they're reaching a limit where the juice just isn't worth the squeeze. Sure, you could do another couple $1 trillion or more trillions of dollars, but you can only double the price of a house in terms of wages so many times until nobody left can afford them, and you get kicked out of your political chair with a bunch of proverbial pitchforks, right? So I think the answer is debt, because fiat is a debt-based system, and I know that is the largest pool of capital in the world, right? We can talk about how, and everyone does talk about it, right? There's the famous Jesse Myers chart. That's a wonderful chart, where art is whatever, 12, 13 trillion, gold's 20 trillion, American or global stocks, 150, whatever trillion, real estate, 300 trillion, bonds, 350 trillion, whatever it is. But the thing that everybody forgets, because we're all living in the moment, and because we can't predict it, which is inherent a part to the design of fiat, the largest pool of dollars is in the future, right? It's like, that's where the money is, right? Like I said earlier, 10 quadrillion dollars of assets, whatever, 10, 20, pick your number, years from now, like 90% of the dollars between now and then are in the next couple of decades, right? Less in common the future in the past. There are more dollars in front of us than behind us perpetually, right? There's more technological acceleration and deflation, therefore needing to keep up the printing for a variety of reasons, right? And so I think, to answer your question, I think the way Bitcoin has this hostile takeover of the world's assets is just take dollars from the future, bring them to today, right? Like you, me, everybody watching this, the best possible dream investment you could have is taking a time machine, right? Paying 5% interest or whatever, taking a time machine, going back in time 10 years ago, taking future dollars that are worth less in real terms and in terms of Bitcoin, going back in time and buying it, right? Obviously, we can't do that. And so the second best thing we can do is, instead of time traveling from the present to the past, time travel from the future to the present, right? So all I have to say is that I think that's what happens. To give a bit more of a, I guess, concrete example instead of pie in the sky analogies, is I think the Bitcoin mortgage is going to be a really big concept. I think the Bitcoin HELOCs could be a great concept. I think the merging of Bitcoin and real estate loans, I think that's a huge concept. Bitcoin treasury loans, all those things I think are huge concepts. As an example, like the average person with real estate equity, 300 trillion of American real estate or whatever, roughly half of that or something is paid off equity. Like is it going to be harder to convince somebody who's more skeptical of Bitcoin, hey, you should buy $1,000 of Bitcoin a month for the next 200 months? Or is it going to be, hey, you can refinance your home and you can convert this equity into Bitcoin, right? Like that's literally what's going to be possible by the end of this year, right? This is something that we're working on in various kinds of partnerships with multiple different companies. And I think that's going to blow people's minds, is that Bitcoiners will be able to buy houses with 0% down, quote unquote. They won't have to sell any Bitcoin to convert it into fiat. Or if they have, let's say, $1 million house, let's say they got $500,000 of equity, $500,000 of debt, they'll be able to refinance at 100% LTV, convert the equity into Bitcoin. And all of a sudden you present that to real estate investors and you say, hey, Mr. Real Estate Investor, you got this investment portfolio, you want some Bitcoin. Sure, you could sell it, wait 6 months. Hopefully Bitcoin doesn't double in the next 6 months. You could pay all these realtor fees. You can do all this stuff. Or you can just do this loan, 100% LTV against your real estate, 50% when it's one-to-one with the Bitcoin. And anyway, all to say is that I think that's where the money comes from. And I think Michael Saylor is proving that. That's where, obviously his company's not over-levered, but basically what he's doing is he's taking money from the future and, penetrating the S&P 500, Trojan horsing the stock market. And, I think the housing market is a way bigger idea than that. And I think the Bitcoin treasury companies are a way bigger idea than that. So whether it's with Bitcoin mortgages and home products, or it's with the treasury companies, or whatever the model is, I think the way Bitcoin takes over the world is less so of traditional fiat rails selling those assets to buy Bitcoin, because that is a systemic risk to the political system. I think it's more so just keep refinancing, stimulate those dollars and force up the price of Bitcoin, and I think that's, it's a bit of a hopium thing, but I think it's also true, right? It's like, I think Trump wants to pump Bitcoin. I think any politician that figures this out is going to want to pump Bitcoin, right? Because, you have to pump your balance sheet, and Bitcoin's the one thing that if you understand it, there's no human cost to it, right? Every percentage point you force the price of real estate up, you get, there is some amount of negative sentiment in your polling results, right? But if you just keep pumping the price of Bitcoin, I mean, the only negative result to that is that you'll get some people that complain that they weren't too early, or they weren't early enough, or they don't feel that way. So anyway, I think it's gonna be really interesting. But yes, I think debt and those kinds of products are going to blow people's minds, because the products we're working on now are 3 to 5% interest. I think within a couple of years it'll be a lower interest rate doing a Bitcoin loan than any other kind of fiat loan. I think that's going to blow people's minds.
Luke Broyles points out a simple truth. Most people never stop to think about Bitcoin. Curiosity is rare, and until it feels personal, until someone sees how it can change their own financial life, it's just another abstract idea. That's why price matters. For all the talk about ignoring short-term moves, the reality is that number go up is what forces people to pay attention. Infrastructure follows value. Without a strong base layer, there's no incentive to build. History backs this up. Every time Bitcoin is pronounced dead, it re-emerges stronger. Skeptics once swore it would never reach $10,000, then it broke $70,000. One day they'll dismiss the idea of $100,000, $1 million, or even $5 million until it happens. The point isn't to fixate on the exact number, it's that Bitcoin's ceiling keeps shifting upward as adoption expands and capital flows into it. Broyles stresses that the road won't be instant or smooth. Bitcoiners love to imagine an overnight revolution, but what's far more realistic is a long, grinding climb marked by cycles of disbelief and renewed conviction. Even if Bitcoin captures only a fraction of global assets, the upside is staggering compared to where it stands today. Yet critics will never stop calling the top. Even at 5 or 10 million per coin, there will be those insisting the rally is over. Let's get back to the interview.
I think the moral reason is, frankly, a lot of people don't want to look at what's actually going on because it is painful, right? Kind of like we were saying, or kind of like I was saying a moment ago, there's a huge cost to our political money, and we don't really want to admit it. Number one, we don't admit it because we don't really think there's an alternate, right? Kind of like I was saying before, it's like, oh, well, if the French aren't in charge of 20 different, literally 20 different African countries use, the French currency, right? So it's like, well, if the French don't use it, some local dictator's going to use it, that aren't wrong. So I think when there is one evil that is seen as a lesser of other evils, people just kind of accept it and they forget it happens. But that's what concerns me, because those are the exact kinds of things that we tend to forget, right? Every year, 8 or 9 million starve every year, right? 3 to 3.5 million freeze every winter, right? I mean, if you just look at the human cost of, hey, us monetizing oil and forcing energy prices up, like that, not 100% of that is practical, right? Some percentage between 0 and 100 is because of our fiat inefficiency, right? Like what percentage of everyone that starves every year is from our fiat inefficiency, right? We make enough food for 10.5 billion people. There's, still a billion people that are malnourished, and 9 million of those billions. So my point is that I don't really think we want to look at that because it scares us and it frustrates us, right? We don't really want to think about, oh, well, what happened in Germany? What happened to the Weimar Republic? That couldn't happen here in America, right? People don't really want to admit that, oh, by me participating in holding money in my bank account or buying American debt, I'm to some degree contributing to that. So I think that's the more reason, but I think the much more common reason is that people just don't think about it. I just don't think people are that curious enough. I think Bitcoin's number one problem is that not enough people believe it can improve or better their personal life. I don't think anyone, unfortunately, I don't think a lot of people will make that switch until they see that. And so as much as I have a love-hate relationship with the number go up prices of Bitcoin, the reality is that is what Bitcoin's greatest need is, right? You've had Michael Saylor many times on the show, and something he says almost every time is this idea of digital Manhattan, which since we're in Manhattan, I think it's pretty appropriate. And the metaphor I always use with people new trying to understand this is that you can't build the city to accommodate 8 million people until the dirt itself, or the base layer itself, is valuable enough to justify the investment in steel and infrastructure, right? So it's a kind of rambling answer, but long story short, why don't more people have an interest in Bitcoin, even though it's every single time in Bitcoin's history somebody has said it is dead, is not been dead? Oh, it'll never hit 10,000. Oh, it'll never hit 70,000. It'll never go back above 70,000. It'll never hit 100,000. It'll never hit 500,000, a million, 5 million, whatever it be, right? And I think it's going to be that way for a very long time. There's a quadrillion in assets today. That's going to be 10 quadrillion in a couple decades, and 5% of that money makes its way into Bitcoin with some minimal multiplier. Like I literally think it's going to take longer than people think. And I think that is a uncomfortable thing for a lot of Bitcoiners. They think they want to see Bitcoin Omega tomorrow, and maybe that'll happen. But at the end of the day, I think Bitcoin will be 5 million, 10 million or more, and people will still be saying, yeah, well, it's 8% of world assets now. It can't go any higher, right? That's huge. Like, that's crazy. That's not sustainable. I literally think it's going to be an exceedingly long period of time. And I think that's logical, because if everybody all of a sudden got it for some reason, then it would just become everything instantly. And I think it's going to take a long time.
What makes Broyles' argument striking is how it reframes Bitcoin's path forward. The focus isn't on retail speculation or short-term trading, it's on the gravitational pull of debt itself, the largest force in global finance. If capital begins flowing not into more inflated fiat promises but into collateral that can't be diluted, the foundation of the monetary system changes. That shift doesn't happen in a flash but in waves, each one bigger than the last, as value recognition forces infrastructure to catch up. The irony is that skepticism fuels the cycle. Every dismissal, every claim that the ceiling has been reached, becomes another marker that is eventually surpassed. What emerges is less about a single price target and more about the inevitability of migration capital searching for safety and finding it in scarcity. The open question is whether the next decisive move comes from individuals adopting Bitcoin out of necessity, or from institutions and governments deliberately steering debt into it once they realize the old system no longer holds. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.